Welcome again, all, in the series of this financial accounting and analysis lectures. I, Dr. Shikha, welcome you all for this session. And as you all know, in the previous session, we were talking about the journal entries. We have taken up a question, and certain journal entries for that question we have already solved. Now we'll continue with the same question. So let's take up the question again. We have solved up till 6th entry, that is 12th January, sold goods to Rahim on credit. Now we'll continue with the further entries of the same question. On January 15th, it is saying Rahim became an insolvent and could pay only 50 paisa in a rupee. Insolvent here means that he has become bankrupt and he cannot pay any further amount. So whatever he is paying is for the full and final settlement. So 50 paisa in a rupee means he has made payment of only 50% of the outstanding amount, and rest 50% will become a loss for the firm. Such type of losses for the firm is termed as the bad debts for the firm. So we have to include an entry of bad debt here in this journal entry for this transaction. So let's take up the entry. It says Rahim became an insolvent and could pay only 50 paisa in a rupee. So first we have to check for how much amount the Rahim is standing with. So in the previous entry, it is saying 600 rupees is the amount of, you can say, credit on Rahim. So sold goods to Rahim on credit 600, and out of that 600, Rahim is only paying 50 paisa in a rupee. So 50 paisa of 600 means 300 rupees. So that simply means that 300 rupees he has paid, and 300 rupees is a loss for the business, which is called as the bad debt for the business. So the final entry will be cash, whatever is received will be debited. Then bad debt, since it being a loss for the business under nominal account golden rule, it says the losses has to be debited. So bad debt will be debited, cash will be debited to Rahim account. Let's take up the entry here. You can see Rahim cash account debited, bad debts account debited to Rahim account. So 300 for cash, which is being received, 300 for bad debt, which is being converted into loss, and rest account Rahim will be credited. So now you can see here in the 12th January entry, we have debited Rahim, and in the 15th January entry, we have credited Rahim. So debit with 600 and credit with 600. That simply means that Rahim account is now closed. Debited with 600, credited with 600, it has nullified the effect. So there will be no more existence of Rahim in books of accounts for this particular business, as his account has been settled with equal and opposite debit and credit. Coming to the next entry, that is, you can see here, sold goods to Ram for cash. It's a simple entry. As you all know, previously I told you also that sold goods will always be considered as a sales. So sales is a credit item, because as per the real account rule, debit what comes in, credit what goes out. And in sales, the goods are always going out of the business. So sales is a credit item. And since the sales is occurring for cash, so cash is coming into the business. Again, as per the real account, cash is coming into the business. So it will be debited. So you can see the entry here, cash account debited to sales account. We will be putting the entry January 18, cash account to sales account, small narration being cash sales, and 1000 in both the debit and the credit columns. Then coming to the next entry, it says paid salary to Ratan, rupees 2000. Salary, paid salary to Ratan means it's a loss, not you can say loss, it's an expense for the business. So it is a nominal account which will be treated as. So salary is a nominal account which says debit the expenses and losses. So means the salary account will be debited. So once the salary account will be debited and you are paying cash or the bank or through bank, so either the cash or the bank will be credited, because cash or bank is again a real account, and real account says credit what goes out. So either the cash is going out or the bank balance is going out through salary. So it will be credited. So the entry here will be on the next page. It is see salary account debited to cash. First you will put the date, then salary account to cash, journal entry being salary paid. the small narration, and 2000 in both the accounts, debit and the credit columns. Then coming to the next entry, paid Anand rupees 4800 in full settlement. Now, first check for the last transaction with Anand before creating any of the journal entry. So I don't think there is any transaction with Anand in January. So it might be the balancing figure that has carried forward some balance for the Anand here. So in January, where the balance has been forwarded from the previous time period, you can see under the credit balance, under sundry creditors, you will find Anand standing with 5,000 rupees. So to Anand, you need to pay 5,000 rupees, and the journal and the financial transaction, it says that Anand is paid Anand with 4,800 has been paid to Anand in full settlement. Full settlement means there will be no further payment in respect to this particular person for now. So whatever is being paid is the final settlement. No further payment will be made to this person. So whatever is the difference in the amounts will be treated as a loss or discount for the firm. Profit for the firm. So the amount that needs to be paid to the vendor is 5,000 rupees, to the creditors 5,000 rupees, and payment made is 4,800. The difference of 200 rupees, since the business needs to pay 5,000 and the business is only paying 4,800, so it is 200 rupees benefit for the business, which will be taken as the credit item, because as per the nominal account rule, credit all profits or the revenues or the incomes, so it will be taken on the credit side. And since the payment is being made to the person, therefore cash or bank balance has to be credited, because the real account says credit what goes out. So either the cash or the bank balance, you can make any of the cash or bank balance credit, because it is not clearly mentioned he has been paid cash or through bank. So both the items will be right. Then Anand account will be debited, because as per the personal account rule, debit the receiver, credit the giver. So Anand is a receiver here. So Anand will be debited, then cash account will be credited, and discount account will be credited. So as we can see here in the journal entry, you can see the final journal entry here. 21st January is the date. Anand account is debited, to cash, to discount. 4,800 is being paid in cash, so 4,800 against cash. Discount received is 200, so that's the benefit for the business, therefore it is credited. And Anand account is debited with 5,000. Now see, in the opening entry you have credited Anand account with 5,000, and in this particular entry you have debited Anand account with 5,000 rupees. So this Anand account has been closed now with equal opposite debit and the credit. So there is no more existence, no more balance of Anand account in your books of accounts. So that is why it is being said in the journal entry that 4,800 is paid for the final settlement. So remaining 200 has been taken as a discount, because has been clearly said that this is for the final settlement. So no further payment will be made. So this is the final settlement. So we have passed in the entry accordingly that Anand account has to be debited with full 5,000, so that this account can be nullified. So nullified in the sense equal and opposite debit and credit balances. Anand has been previously credited, now he has been debited, his account has been settled. Then coming to the next entry, it says interest received from Madhu 200. Interest is always, you can say, can be taken in both ways. Interest can be paid by the business also, interest can be received by the business also. If interest is paid, it is an expense. If interest is received, it is an income. So you have to, for interest, you have to be very clear that it is being received or it is being paid by the business. So in this entry on 26 January, it is said interest received from Madhu. Interest received means it is a income for the business. So from Madhu, 200 rupees is getting received. So received in the sense cash account will be debited, because interest is received maybe through cash or bank. So since it is a smaller amount, so we can take it as under cash account. So cash account debited to interest account. Cash is getting received, and since interest is a income, cash is received through interest, and interest is a income. So interest account will be credited and cash account will be debited. So interest received will be a benefit here, and the final journal entry, as you can see here, is cash account debited to interest account, with a small narration being receipt of interest and 200 in respective column. Then coming to the next entry, that is paid to Bablu, interest on loan 500. Now see, this is the interest which is being paid by the business. So now in this case, interest on loan is a expense for the business. So the entry will get reversed. As you can see here, in the previous entry, cash was received and interest was an income. Now in this case, cash is going out of the business, so it will be credited, and interest on loan is an expense. Therefore, it has been debited here. So under 28 January, interest is expense to cash because cash is going out of the business at 500 rupees in the respective column. Then coming to the next entry, sold goods for cash 500. Now this is a easy entry for you all. Sold goods, it is a sales entry. Sales is always being credited as per the real account rule, and since it is a cash transaction, therefore cash account debited to sales because cash is coming into the business. So the final entry will be cash account debited to sales account. Then we'll come to the last final entry for this question, that is withdrew goods from business for personal use 200. See, in any business transaction, if the transaction says that goods have been withdrawn from the business or cash has been withdrawn from the business, it will be considered as a drawing for the business. Drawings here means, drawing is a you can say, so it is something which the owner is taking out of the business. So if owner takes anything out of the business, that is a technical term used under books of accounts is drawings. And with that amount, the capital account gets reduced. So whenever somewhere, anywhere it is being written that with you goods or with you cash, then definitely you have to take it under the drawings account. And in the case if it is saying that video goods is there, you have to credit, make it a point that you have to credit the purchase account. And if in case it is saying cash, so you have to credit the cash account since cash is going out of the business. So in this case it is saying video goods from business for personal use, therefore drawings accounts will definitely debit it. And since it is a goods which is getting withdrawn, so obviously the purchase account will be credited. So we can see the final entry here in the question. Drawings account debited to purchases account 200 rupees. Being goods withdrawn for personal use, we'll put the entry, date entry, and then debit and credit amounts will be there in the respective column. So this is it for the journal entry. If you have any doubts, you can uh, mail me for the doubts accordingly. But one more thing before winding up with this session is this, that when your journal entries are all prepared, you are done with all the financial transactions in respect to the journal entries, then always and always keep a total at the end of the journal entries, like all the debit total and the credit side total. And make it a point that the total should always be equal, because for each and every entry, as you can see here also, you have, for each and every entry you have entered the same amount under the debit and the credit column. So the total should always be same. This is the rule for the journal, like debit and the credit column should be having the same equal. So always when you are done with your financial transactions in the form of journal entries, and at the end you have to make the total. As you can see here also, 96,900 is the total at the end of all the journal entries. So I'll take your leave for now. We will meet up for the next lecture. Thank you.